Today, we're going to talk about SoFi, take a deep dive into the key data points, analyze what influenced its movement, and break down all the essential details you need to know. Let's get right into it. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi experienced a decline of 4.45% during regular trading hours, followed by an additional 1.08% drop after hours. It was undeniably a tough day, with the stock ranging between a low of $14.68 and a high of $15.55. One notable aspect was the trading volume. 46.6 million shares exchanged hands compared to the average of 42.2 million. However, a significant portion of this volume was attributed to algorithmic trading rather than institutional investors making substantial moves. Large-scale transactions exceeding $100,000 remained limited, and the data didn't align with the options market, reinforcing the role of automated trading. Interestingly, there was a small reduction in short interest, with about 374,000 shares returned. Currently, approximately 12.25% of SoFi's free float is being shorted, which equates to roughly 131.89 million shares. A peculiar aspect of today's trading was the return to normalcy in the cost-to-borrow rate, after previously showing negative values. It seems like brokerages adjusted their parameters, allowing borrowing costs to resume their usual patterns. These behind-the-scenes activities add an extra layer of complexity to what transpired today. The broader market exhibited significant fear, largely driven by macroeconomic data. Initial jobless claims came in at 219,000, slightly above the expected 215,000. While negative data often supports the case for interest rate cuts, the accumulation of concerning indicators has heightened investor anxiety. Additionally, several companies have issued disappointing future guidance, fueling market-wide pessimism. Notably, even Amazon saw a sharp after-hours decline due to weaker-than-expected Q1 forecasts. The overall market remains incredibly unforgiving. Shifting focus back to SoFi, the stock continues to be subject to a high degree of manipulation. Covering multiple stocks across different sectors has reinforced this notion. Few stocks appear to be influenced as heavily as SoFi. Today, there was no company-specific news, no SEC filings, yet SoFi dropped significantly more than its fintech peers. The primary catalyst was an analyst rating downgrade. Compass Point's Giuliano, with a track record of only 56% accuracy, issued a sell rating with a $6 price target, triggering a sharp sell-off. This phenomenon is nothing new. Whenever SoFi receives a bearish rating, whether it's $5, $6, or $8, the market reacts with disproportionate fear. Conversely, bullish ratings, such as a $20 target, barely move the stock. The market's bias toward negative ratings is evident. Adding to the humor of the situation, we haven't heard from analyst David in quite some time. His success rate has dropped from around 60% to 48%, indicating a series of poor calls, including on SoFi. Given that it's been 3 months since his last report, another rating may be coming soon. If history is any indicator, it will likely lean negative. Beyond analyst ratings, short sellers have played an active role. Options data revealed 24 million call contracts and 11 million put contracts, with 49% of the total being bearish. The pattern observed was familiar. Pre-market activity appeared stable, but as soon as regular trading hours began, selling pressure intensified. A significant volume of put options was purchased, suggesting a strategy where traders first acquire puts and then sell shares to drive prices lower, profiting from the subsequent decline. Retail investors have not been the primary drivers of recent SoFi activity. Institutional investors have taken the lead. Retail traders either panic sold in Q4 or took profits along the way. This has allowed institutions to exert significant influence over price action. Among call options purchased today, most centered around the $16 strike price, reflecting diminishing optimism. Meanwhile, bearish traders are eyeing a price below $14, reinforcing the ongoing negative sentiment. With the stock closing at 1480s, it remains caught between these two levels. From a technical standpoint, SoFi is at a critical juncture. The support level at 15.93 cents failed to hold, leaving 14.09 cents as the next significant support. Over the next few trading sessions, this level will be crucial to monitor. Looking at open interest, there are 4,000 contracts at the $15 strike, 8,000 at $15.50, 21,000 at $16, and another 21,000 at $16.50. Given the relatively small numbers, it's unlikely that shorts will aggressively push the stock below these levels. However, broader market conditions remain an unpredictable factor. Analyzing the moving averages, SoFi closed below its 50-day moving average once again, which is typically a bearish indicator. On a positive note, it is currently in an oversold state, suggesting that a bounce could be on the horizon. The stock also has a 100-day moving average sitting at 13.04 cents, which could serve as another key level. While today's movement may have been an overreaction to the analyst downgrade, the broader trend suggests that the downgrade was strategically timed to push the stock lower. For the past few days, SoFi has been teetering on a critical threshold, and this rating acted as the final nudge to send it downward. Whether justified or not, SoFi may experience additional consolidation in the coming days. The overall sentiment remains mixed, and the trend will likely dictate the near-term direction. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.